Welcome to Coleman Report Live. I'm Bob Coleman. We're talking Main Street and the small business lenders who help it grow on 12121. John Riossi, our Thursday guest. John, good to see you. We missed you last week.
Thanks, Bob.
Nothing going on in Washington of note that we need to talk about?
There was something yesterday, but I forgot.
You forgot. Well, we'll get to John. John has a ton of stuff. We'll get to that. Katie, good to see you as always. Let's go to the poll questions. Number one, the guaranteed percentage is 100% for PPP second draw loans. True, false, or I don't know.
Still true.
Yeah, that's true. Let's see. What are we going to do? We stump anybody? No, 92%. That is a true statement. Number two, lenders must perform a good faith review on all second draw loans over $150,000. We are doing softball questions today, Katie.
Well, there might be some confusion there with the new guidance on loans under 150, but yeah, I don't think a lot of people are going to be stumped by that.
Yeah, we have a smart crowd today, John.
We do.
Okay, the last question. For second draw PPP loans less than $50,000, lender fees amount to equal to the lesser of 50% or $2,500. In other words, you cannot charge $2,500 for a $100 loan. Is that true or false?
That is true.
That's true. John, talk to us about that. I understand this is earnings week. My eyes certainly got Morgan Stanley got my attention with 48%, but this is your expertise. What's going on with earnings calls in the banking industry overall?
Well, the earnings results are mixed. Some companies, and I mean, Morgan Stanley is a bank, but it's a very speculative kind of up 48%. The numbers have been less pronounced at the more traditional banks, but still very solid. And one of the themes has been at many banks, the contribution, the better than expected, better than anticipated contribution from PPP, which is resulting from quicker than anticipated forgiveness. And I'll cite one that I was listening to.
Please, yeah, that's interesting. That's interesting, yeah.
Cleveland-based Key Bank, big bank, about close to $171 billion of assets. They reported an extra, not an extra, they got $28 million of fee income in the fourth quarter from PPP because they had $1.3 billion of their loans forgiven. So I guess that was higher anticipated for them. They're expecting at least another $1 billion this quarter, and they're going to ramp up production again. They talked about originating another $2.5 billion in PPP loans. So they should have strong figures throughout the remainder of the year in terms of fee income and perhaps into 2021, but they don't anticipate it going deep into 2021.
So that $28 million you cited, I assume that's the fees that's paid to the lender by the Treasury.
Right.
Very good. Did they talk about loan loss reserve? Are they reserving anything for these guarantees?
No, they're these loans are guaranteed 100%.
Right.
They anticipate overall sort of macro for all their first phase PPP loans. Obviously, they haven't made many of those $2.5 billion yet, so they're just starting that. But at least 80% forgiveness of the $1 billion they did between April and August 8th. So,
John, you may know this better than me, or maybe Katie can jump in. Is there a direct correlation between forgiveness and recognizing that brokerage income? Can we recognize the income before we get forgiveness, or are those two issues tied together?
I think they're tied together. I think the forgiveness is.
Now I know we're getting outside of our realm of expertise, but because I've heard that as well, but I haven't confirmed that. Katie, have you heard anything or read anything on that?
I wouldn't really know the exact. Yeah, I haven't heard.
John, what are you hearing about PPP overall? I assume that lenders are more happier with this time around because we got this piece of paper that tells us how to do guidance and very specific. But what are you hearing out there in the field?
You know, the lenders I've talked to, number one, that are doing it again, I would say relatively pleased as they start on the new phase, the relaunched program. They are pleased with the performance of the system, of the loan system. We can't call it E-Train anymore, but they're very pleased. They, you know, the ones that I've talked to say it has been going very smoothly. You know, the one issue, and it's not with the system, it's with the process now. How it's being handled is the interval between submission of a loan.
Yeah. In fact, Joseph, make a note of that. Let's ask that tomorrow in a poll question. John, what are you hearing from the lenders? How long is it taking for SBA to sign off on these applications?
SBA is saying 24 to 48 hours. They'd like to get it closer to 24. And that seems to be, you know, what the lenders are seeing in this first week. You know, we were talking offline. I spoke to one banker who, when I first talked to him on Tuesday, he was a little bit to worry because they had this is a bank with less than $1 billion of assets. They had begun lending Friday and hadn't had any response from SBA on any of their loans. And then a little bit later that afternoon, not much longer, he emailed me and said they got a big batch of approval.
And it was a release. When you say 24 hours, are we talking 24 hours? Or are we talking 3 calendar days? I
think we're talking 24 hours. I think this program is perhaps running, you know, 6-7 days a week. I'm assuming that they took Monday off along with the rest of the country, but they are at work. They are churning out loans.
John, I want to ask you about the mood in Washington, but before I do that, let me give you an update on Lance. Lance was here yesterday, and he had to sign off quickly. His mom was in an accident. She broke her back, but she's going to be okay. She's elderly. But because of that, I can relay the story that Lance said. She said his mom did a Dukes of Hazzard and flew over the median and struck a house. Now, I know that's not funny. Well, it is funny, but it's funny that she's going to be okay. So, yeah, I'm not just the visual of anyway. So she's going to be okay. So I knew some of you were worried about that. Mood in Washington, you're on the field, you're on the ground. Just your general impressions.
I think people are relieved that everything went very smoothly yesterday.
Unless you're in Portland or Seattle, Katie.
The other Washington, Washington, not our Washington. Everything went smoothly, and really looking to get back to business.
And we asked this question, and I've gone on record. I assume you're not going to contradict me. I don't see any changes between the Trump administration and Biden administration as it relates to this specifically niche, this PPP lending programs and additional stimulus. I don't see any major change in policy direction, do you?
No, and I'll say this. This is my personal observation. I think it's a telling fact that the Administrator Carranza, is still working. And
thank you for that. I didn't know that. So tell us how that works. Thank you for that.
Well, obviously, President Biden has appointed a new administrator, but she has not been confirmed yet. So, you know, one of two things can happen. And if you recall, you know, obviously the administrator can stay on for, you know, a period of time, or they could, she could have resigned and you know, would have career, you know, administrator would have stepped in as the acting administrator. And Pilkerton was in that position for quite a while. Before Administrator Carranza stepped out. But it's telling. I mean, this is a very important program, and I don't, you know, I'm not expecting any major changes other than perhaps enhancements as we go forward.
I concur that. Well, thank you very much for that. I did not know that. In fact, that was one of the things I was going to track down. I mean, that's a very positive statement. It's very telling. I'll go one step. It's a very strong signal that, hey, this ship isn't going to be turning. And as you said, I see further enhancements as well. So thank you very much for that. Katie, give us some numbers. John, I don't know if you've seen these numbers, but
Yes.
the one that stuck out in my mind was 3,000 lenders are participating. That's a huge number. How many? We had, 5,000 lenders the first time around? But still, 3,000 lenders is more. Go ahead, Katie.
Yeah, the really interesting thing about these numbers, though, is this is only from the first week. And if you remember, that's just community financial institutions and small lenders at the very end of the week. So I can imagine there probably are going to be more lenders participating this round.
Of course. Yeah.
And probably because we have a little bit more guidance now. People know what they're doing. They're a little more prepared for it. So starting off the week with only those community financial institutions and then small lenders, I imagine we're probably going to see at least 5,000 lenders this week or next week, and possibly more later on.
Katie, do we know the difference?
Devil's advocate,
Please, John.
Well, if you think about the industry, the shape of the industry like a pyramid, and the sort of super money center banks are at the tip of that pyramid: Bank of America, JP Morgan Chase, Wells Fargo, U.S. Bancorp, et cetera. These, the 3,000 that have signed on in the first week, that's the base of that pyramid. That's the, community banks, community financial institutions.
Credit unions.
Credit unions, the same thing. That's the significant chunk of the industry. There aren't as many banks, 1 billion and more. So I'm thinking we're going to see already several hundred more have signed on. We talked about Key Bank, other banks with more than $1 billion. I talked with Connect One Bank in New York yesterday. They're definitely actively lending, but there aren't as many of those. So I'm thinking I was a little surprised. I'm expecting when it's all said and done that there are going to be several hundred, perhaps 1,000 fewer lenders. I could be wrong, and I hope I'm wrong. But,
no, I think I concur with that, because I've had several conversations with lenders who have said, hey, we're going to do PPP, but we're only going to do it with existing customers. You can't walk in off the street. If you have a relationship, we're more than happy to take care of you, but we're just being a little careful. Katie, do we know what the numbers are on those 60,000 between first and second draws?
I don't believe they've really split it up yet. Now, remember, there was that few days where it was open, where it was just first draw, and then they opened it up for second draw. I don't believe they've separated those numbers yet. This is the numbers that they gave us, I believe, yesterday. So they will probably separate that out when they do their end of the week report, or they might be doing that more on a monthly basis now, but I'm sure they will separate that eventually.
John, do you see this program running out of money? What are we talking about? $250 billion, Katie? $254 billion, something like that?
I think the overall number that they quote is $284 billion.
Yeah. Okay.
35 billion of that is dedicated for first draw. The rest of that could go to first or second draw. I don't think money will be an issue, because number one, that's a lot of money, and number two, given the support for this program and the support for small businesses in general, if it did run out, if the activity was that strong, I can't see them not topping it off again.
I agree with you.
I'll just mention one quick thing with regard to the split between first and second draw loans. I don't have, out of that 60,000, I don't have anecdotal comments from some of the bankers I've talked to, and at those banks, it's significantly, trending towards second draw loans, like 10 to 1.
Okay.
So I think it's going to be, when they do provide it, it's going to be a lot more second draw loans than first draw loans, at least for now.
Katie, what is the window? How long is this second draw PPP window open? When does it expire? Do you know?
So I believe that's in March, and yeah, John's nodding. So I'm guessing I'm correct. That's same as first draw through March. So I could see them using quite a bit of this, but if you remember correctly, the program was open with funds left over for a very long time. So I don't really imagine anybody who didn't get a loan before needing a bunch of new loans. I mean, it was available to them before. So I don't know why they wouldn't have applied before unless they only just now are becoming eligible for some reason. So I think it's going to stick around. There's enough money.
I'm going to get to some of these questions real quick. Why is this notice important? Excess loan amount errors. First of all, Katie, I don't know how big of an issue this is, but they have given us guidance. John, do you know how big of an issue this is out there in the market?
I have not seen this raised as a major issue. Obviously, it's a big issue for those borrowers that this happens to, but on a macro level, I don't think it's a large.
If you have that, we're not going to go through the notice. It's about 4 or 5 pages. Read it. They talk about lender errors, borrower errors. Obviously, you want to be on the borrower error side so you don't lose the guarantee. So that's we'll just leave that out there. We have that done. Let's go to some questions. Correction, Lance made a comment that businesses that have been purchased after February 2020 were not eligible. They are eligible. So
that's in a change of ownership situation though. So that's only going to be that specific kind of situation if the entity already existed before that February 15th date.
My understanding is, and correct me if I'm wrong, 1099s are going to be issued by Treasury. The lender does not have to do that, correct?
That's my understanding, but
Paul, that's what I sorry, Paul, I didn't mean to throw your last name in there. Paul made a question that says, someone at his institution is saying that we need to get dollar amounts for 4 quarters of state unemployment statements. I haven't seen that in the IFR. Have you or Katie, John? Yeah. So
no, I haven't seen that.
We don't know where that is in the regs. So we're gonna go on the side. You don't need that. As long as you have the employment 940s, you're going to be fine. Let's go to some more questions. Can a borrower apply for an increase if SBA loan, the first draw has been forgiven? An increase, I don't know why you would.
I'm going to weigh in here. I am usually the last person you would want to go to for technical advice. So with that in mind, I'm going to say this. There's no mechanism outside the second draw to get additional funds. There's no mechanism to increase an existing loan. So if you were to want additional PPP funding, it's the second draw, and you have to qualify for that.
Yeah, I mean, there are reasons we can increase it, but I agree with John, right, Katie?
For the most part, yes. There could be some things in the regs that made it so that certain borrowers were eligible for more than they were approved for, in which case they could get an increase. But in this situation, no, because the SBA has already remitted forgiveness. At that point, you have to go with a second draw if you want more funds. The first draw, you can't get more if they've already done that forgiveness. However, if you have applied for forgiveness and SBA has not issued a decision, you could pull that forgiveness decision and allow the borrower to apply for that increase, and then later on focus on doing a second draw.
Ralph wants to confirm that EIDL can only be rolled in for a first draw application, not in the second draw. That is correct, because there is no way to do that in the second draw. I see Katie nodding her head. Am I right in that, Katie?
So the first draw application has, I believe, a checkbox or maybe just a form to fill out with the number there. The second draw does not even have that portion in the application.
Ralph also follows up and says, hey, I want to make sure that I'm right. It says the FAQ does not address allowing compensation. Can you confirm yes or no, are the owner's salaries able to be included in the second draw? The answer is yes. Even though it's not a specific FAQ, you still can do that. Robert asked the question, new form 3508, which is basically an affiliation form. Does SBA expect lenders to go back to fully forgiven borrowers and ask them to fill this out? I don't know. Do you know, Katie?
I know the regulations are there and it talks about the issue, but I don't know the answer off the top of my head. I'm sorry.
Yeah, we'll get back. We'll get back to you on that. And we have all your other questions. Lance will be in tomorrow, and he's going to do a webinar on Tuesday on forgiveness, everything you need to know about forgiveness. I know, Katie, you're finishing up our forgiveness guide, so we're working diligently on that. John, I appreciate your time. Thank you so much. We appreciate your insights. Stay healthy and with the little virus incubators running around. I've been the subject of that, not COVID, but just regular viruses. So let's all be safe with it. Katie, good to see you as well. And thank you for joining us today for Coleman Report Live and for supporting America's Main Street, one entrepreneur at a time.
Have a great day.